Signs of a Trump-Modi alignment on trade-ups or hopes of an early resolution on tariffs lifting sentiment. Auto and consumer durables lead the gains while energy stocks drag. Axis Bank reports strong loan growth and beats margin expectations, but a one-time 1,200 crore standard asset provision on RBI's directions impacts the bottom line. The bank hopes to write back the provisions by the end of FY28. The board of RBL Bank will meet on the 18th of October to consider a private placement of securities. The exchange intimation at a time. Sources point to Emirates NBD buying a sizable stake, ups expectations of a revelation soon on this. It seems there is no stopping the gold and silver rush, with both precious metals scaling to new records as expectations of a Fed rate cut, rising US-China trade tensions, the US government shutdown and the Indian festive demand stir combine into a bullish cocktail. And US President Donald Trump says Prime Minister Modi has committed to stop Russian oil purchases. The Indian government responds in a diplomatic fashion, reiterating that its import policies are guided by domestic priorities, but adding that it is in talks on expanding US energy imports. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. It's a very, very positive penultimate trading session to this week. It's an earnings heavy day as well. We are counting down to some important results, but the key takeaway for the first half of the session is the fact that the Nifty has now crossed the 25,500 mark, almost a double hundred yet again for the index. It's now making new highs, at least on a swing high basis, still 700 points away from the original record of 26,277, and a lead contributor to that has been the Nifty Bank, as has been the case over the last few weeks. Now the Nifty Bank at 57,300, so almost around about 350 points away from its own record high, which is at 57,628. But a sector that has been in the spotlight over the last couple of hours has been the FMCG space, and that is after Nestle came out with its results a few minutes ago, and the FMCG index now 1.5% higher, led by Nestle, which is now trading with gains of around 4.25%. A high single-digit domestic volume growth compared to expectations of 1 to 2%. And as a result of Nestle's earnings, a lot of other FMCG stocks have started to move higher as well, say for the likes of Radico Khaitan, say for the likes of Varun Beverages, say for the likes of Colgate, all of them trading at the highest point of the day. But the other major result that was reported last evening was Axis Bank, and Gaurav is now joining in with more details on this and the fine print. Gaurav.
Well, yes, when we look at Axis Bank, when we look at the numbers, three things to highlight. First is that when we look at loan book growth, now that has returned to its double-digit growth trajectory. It came in at around 11.7% growth on a year-on-year basis. Remember, for the last 3 quarters, Axis Bank has been reporting single-digit loan book growth, which was actually weaker than what we had estimated earlier. Other than that, second trend, which was very positive for Axis Bank, is the net interest margins. Now, they came in at around 3.73% versus what it was at 3.8%. This indicates 7 basis point fall versus what the street was expecting at around 3.63%. So definitely this number was also better than what the street was expecting, and at the same time management said that the cost of fund, actually they managed it well, and that is the reason why net interest margins came in just 7 basis point lower. So that was not a one-off impact. It is something that the management did. Third is that when we look at the gross slippages because of the technical impact, remember last quarter management recorded technical impact, and that is the reason why slippages as well as credit costs, that was elevated. But in this quarter, if you look at the absolute number, the gross slippages, that has come down almost by 44%. And at the same time, if we look at ratios, be it gross slippage, net slippage or credit cost, all these ratios have come down significantly, and again in line with what we have seen for as a trend for the bank. What came in as a hiccup is that there was yet another one-off in the provisions. For this quarter, the provision number increased almost by 1,240 crores, and this was one-off, not because of any asset quality risk, but it was because of the classification. RBI directed bank to create provisions worth 1,231 crores because 2 of the crop loans were classified as PSLC. So that is the reason why we saw PAT declining almost by 26%. But all in all, when we look at stock performance, it is performing well because of the good numbers that we have seen, and operationally strong quarter for Axis Bank in this quarter.
Indeed, Gaurav, thank you for that update. Axis Bank's results rubbing off on other banks as well, and as a result, the Nifty Bank headed towards the highest point of the day as well. Shifting our focus now to the IT sector. Now, ahead of the big IT results being Infosys and Wipro later this evening, Rima gives us a lowdown on the key things to anticipate from these companies and, of course, from LTM entry as well. Rima.
Thanks so much for that. So just to quickly get through the numbers then, for Infosys, it's expected to be a dollar revenue growth of about 2.2%, margin expansion to 21.3%, and a profit expected to jump nearly about 5%. But the key is, what does the company do with respect to its guidance? The current guidance is 1 to 3%. Some analysts believe the company could tighten it, increase the lower end, and therefore the new guidance stands at 2 to 3%. But this is not material unless the upper end of the guidance, that 3 becomes say a 4%, which is not currently in the price. Margins are likely to be stable. Wipro is the other one, and in the case of Wipro, the company is expected to deliver a constant currency revenue growth of 0.2%, so within the company's guided band of -1 to +1. Now, margins for the company, according to the poll, 16.8%. And this is lower compared to the adjusted margin. So last quarter, there was a restructuring impact, and therefore the reported margins were lower, but the adjusted margins were 17.3%. So 16.8 compares with 17.3%. And the reason why rest of the IT companies have reported a margin expansion because of the rupee fall, Wipro is not, because they won some large deals and there is a transition cost associated with them. Now, key is going to be the guidance. Some believe it could be -0.5 to +1.5%, or -1 to +1. So that's going to be key. And the last one is LTIMindtree, where again the company had spoken about growth in Q2. So the street is penciling in a top line growth of about 2.2%.
Rima, thanks a lot for that. Indian Bank numbers on your screen, an 11.5% net profit growth and a 6% growth in its net interest income. Asset quality relatively stable as well, little change on a sequential basis. The provisions have gone up slightly on a sequential basis, down on a year-on-year basis, although the stock has now moved to the highest point of the day, 1% higher for Indian Bank. I'll get more details on this. But the two new listings, Canara Robeco and Rubicon Research, we spoke to the managements of both of these companies about their growth outlook going ahead. Listen in.
We believe that equity markets will outperform all other asset classes 7 out of 10 years. That's our firm belief. And hence, we are positioned accordingly. 91% of our AUM mix is in equity because of that belief. The kind of AUM you get from the markets that you get that are very important, and from the kind of distributors that you get your AUM. That's important. But to me, if you have to put a single factor in terms of growth, it will be AUM growth that will lead to profitable growth overall. We will possibly launch another fund before the end of FY26. And clearly, in terms of growth rates, we believe that we can replicate similar growth rates as in the past, going forward, at least for FY26-27.
We'll continue to do our best. Our performance, and we'll continue to keep on focusing on our execution and our research and development. There are multiple operational levers to our business, including launches, a new plant coming on stream. So a lot of other, launches, a lot of our specialty business growing. As we move ahead in the direction and we go in this journey, I think we'll definitely work towards a broader guidance as we move to, and our business, as you know, is a R&D based regulated markets business. So I think as we move in the listed journey, we'll definitely come out with something more directional and more substantive to give you.
A healthy listing for Rubicon Research, 27% higher compared to its issue price. And now the other one, of course, RBL Bank, out of the F&O ban today. But the bigger story is the fact that Emirates NBD looking to acquire stake. Of course, we reported about this yesterday. Ritu is joining in with more details on this and the board meeting scheduled for Saturday. Ritu.
Well, as we've been reporting, the highly anticipated Emirates NBD RBL Bank deal is set to be announced very soon. In fact, we could hear about it as early as this Saturday when the RBL Bank board meets to consider and, if thought fit, approve a fund raising through a preferential issue or private placement, etc. Incidentally, that's also the day the bank is going to be reporting its second quarter numbers. Now, we had reported that Emirates NBD, the second largest lender in the UAE, is looking to acquire around 60% stake in RBL Bank in what is set to be a landmark deal, marking one of the largest foreign forays into India's private banking space. This is also going to, of course, factor in the mandatory open offer that Emirates NBD will have to make. Now, NBD, we understand, is going to acquire this through a fresh equity issuance to its wholly owned subsidiary, which means the entire investment is going to be directly infused into the bank. This is also important because RBL Bank's current foreign shareholding is well over 22%, and the fresh equity issuance to Emirates NBD will expand the overall capital base of RBL RBL Bank such that NBD's stake remains within the regulatory FDI cap of 74%. Now, our sources also indicate the transaction is expected to be priced, of course, in line with SEBI's prescribed formula, but without a major premium to RBL's current market price. The transaction, of course, cannot happen without RBI's blessing, and they, we understand, have given an informal nod to this change in control. Formal submissions to RBI, of course, will follow once the boards approve these deals. Now, while RBI is not expected to relax the 26% voting right cap, our sources do suggest that they may offer a glide path to Emirates NBD, allowing it to gradually bring down their shareholding in RBL Bank. So October 18 is the key day to watch out for a firecracker deal in the banking system just in time for Diwali.
Ritu, thank you for that update. Take a short break. More news and updates on the other side. Welcome back. Now, in a significant diplomatic development, US President Donald Trump has said that Prime Minister Narendra Modi has vowed to halt purchases of oil from Russia within a short period of time, signaling a possible resolution to a key issue at the center of the diplomatic and trade rift between Washington and New Delhi. Trump revealed that Modi made this commitment during a previously undisclosed conversation on Wednesday. Listen to what he had to say.
We have a great relationship. He just said that 2 days ago, as you know. We have a great relationship. No, we were not happy with him buying oil from Russia because that lets Russia continue on with this ridiculous war where they've lost 1.5 million people, by the way. Russia's lost 1.5 million people, soldiers mostly. This is a war that should have never started, but it's a war that Russia should have won in the first week, and they're going into the 4th year. And I want to see it stop. So I was not happy that India was buying oil. And he assured me today that they will not be buying oil from Russia. That's a big stop. Who would think I created peace in the Middle East and can't get the two guys to settle? But I think we'll get them. But if India doesn't buy oil, it makes it much easier. And they're not going to buy it. They assured me they will. Within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over.
The last line being the more important context there from Donald Trump. Meanwhile, the External Affairs Ministry has responded to these comments and says that India's consistent priority is to safeguard consumer interests in oil and gas imports. Parikshit is here with more details on this. Parikshit.
US President Donald Trump has made a big statement stating that the Indian Prime Minister has told him that India will stop buying Russian oil. They may not do so immediately, but they will do so in the next few months. The Ministry of External Affairs has reacted to President Trump's statement. While they've not confirmed or denied whether there has been any immediate conversation between the two leaders on shutting off Russian oil purchases, but they have indicated that India will expand the energy partnership with the United States. In a detailed statement, the MEA has said that India's consistent policy has been to safeguard interests of Indian consumers in a volatile energy scenario, ensuring stable energy prices and secured supplies have been our twin objectives, and we've been broad-basing our energy sourcing and also diversifying to meet market conditions, and this has been our stated policy. Having said that, the MEA has said that India has for many years sought to expand energy procurement from the United States, and there has been steady progress in expanding the energy procurement from the US as well. The current US administration is showing interest in exporting more oil and gas to India, and discussions are ongoing for future contracts as well. In this backdrop, we'd like to tell our viewers that according to industry sources, India has already purchased $8 billion worth of oil and gas from the US in 2025. This is already 60% higher on a year-on-year basis. Sources tell us that by the end of this year, these oil and gas purchases may even touch $12 to $13 billion, and possibly by the end of this fiscal, we would see a total purchase from the US to the tune of around 24 to 25 billion US dollars. Sources say that this itself would do a lot in terms of bridging the $45 billion trade deficit between India and the United States, and it addresses the concerns of the US in a great manner. Having said that, There has been very positive conversations and commentary on the India-US trade negotiations by both sides. Sergio Gore, the US ambassador designate, was in India. He's had conversations with a series of officials, including Prime Minister Modi. He's gone back with a positive message as well, we are told. Let's see what happens. India's Commerce Secretary is in US for negotiations. So let's see what happens in the next few weeks now.
Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Double century almost again for the Nifty. 25,520 is where the index currently lies. The Nifty Bank also nearing record high levels, just 300 points adrift off that. And keep an eye out on three other numbers that have just come in during the course of the show. Mastech, Swaraj Engines and Indian Bank, the three stocks that have just reported numbers over the course of the day. Mastech now 2.25% higher after its results. Swaraj Engines has slumped to the lows of the day, 4.5% lower, while Indian Bank continues to hold on to gains of around 1%. We call time on this edition of Business Lunch. From me, thank you, and the team, thank you so much for watching. Midcap Radar on the other side.